It's Thursday, February 7th. Welcome to Market Foolery. I'm Chris Hale. Joining me in studio, Bill Mann in the house.
Hello, Chris. How are you?
I'm good. Good to see you. I'm better for the sight of you. That's how I am. We've got Chipotle earnings. We've got Twitter earnings. We've got to start with the deal of the day, though. We got a bank merger.
For the first time in more than a decade, we've got a big bank merger.
We do. SunTrust and BB&T are teaming up in a $66 billion, what is being called a merger of equals. They're not quite equals, but it's an all-stock deal. This creates the sixth largest bank in America. Shares of both SunTrust and BB&T are up, so I'm assuming this is a no-brainer.
Yeah, I mean, we're...
If all you're doing is looking at the stocks, you go, wow.
You are what the scoreboard says you are.
Yeah.
Well, so a couple things have happened. One is that the Trump administration has lowered some of the inhibitions for bank mergers that have been in place since the global financial crisis. The other thing that has happened is that banking, and particularly deposit taking, has changed a little bit. And the regional banks, of which SunTrust and BB&T are having a little bit of a difficult time competing with Citibank. I mean, even Goldman Sachs now has checking accounts and branch access and things of that nature. So it's a good merger for both of them. They are not community banks anymore, and they risked kind of being in that spot where they weren't the hugest, so they didn't have access to certain types of capital, but they're not tiny anymore.
So I get that there are a lot of good things about this and a lot of synergies that can be wrung out. This does seem like the resulting entity should put them in a better position to compete against the even bigger banks.
Yeah.
That being said, there are a couple of things behind this deal that have not just you and me, but I think a lot of people scratching their heads. And let's start with the fact that we've got Kelly King, who's the CEO of BB&T, is going to be the CEO of the combined company until early September of 2021, when William Rogers, the CEO of SunTrust, is...
I want to call him Will Rogers. Yeah. I'm desperate to.
William Rogers is going to take over as CEO. Why are they having this revolving door in the
It's a little bit
office?
Of actuarial arbitrage, as we might call it. So Kelly King had said earlier that he was planning on retiring in 2021. And so that's a pretty clean process because BB&T is the acquiring bank, even though it is a merger of equals. Something funny about BB&T. BB&T is from Eastern North Carolina, and the company is called Branch Banking and Trust, and everyone thinks that has to do with their strategy. No, the co-founder from 1872 was named Branch.
Oh.
Yeah. Alpheus Branch and Thomas Jefferson Hadley founded this bank. So it is a bank that has retained the name of its founder for 150 years. The other interesting thing about this merger is that BB&T is based in Winston-Salem, North Carolina, and SunTrust is based in Atlanta. But after the merger, they are relocating headquarters to Charlotte. So Charlotte will once again have the headquarters of two of the six largest banks in the country.
That's right, because Bank of America is down there, right?
Bank of America is there, and also Charlotte is basically the number 2 headquarters for Wells Fargo. So once again, Charlotte, Bank City, USA has maybe the biggest winner in the whole deal.
They have not decided on a name for the resulting
entity. It's got to be Branch, though. Now that we've determined the history, how can you walk away from that?
It'll be interesting to see what they come up with, because certainly we've seen rebranding efforts go awry. So hopefully they just they do no harm. By the way, before we move on, can you just share with the dozens of listeners what you shared with me, the little fun tidbit about SunTrust Bank, which I was not aware of?
Oh yeah. So SunTrust is actually a pretty big loss for Atlanta, because SunTrust is an Atlanta institution, and one of the things that SunTrust has in a vault is the formula for Coca-Cola. The Coca-Cola company keeps their original formula hidden locked in a vault at SunTrust.
Do you think that's now going to be moving to Charlotte?
Well, I think once again, I think we have an opportunity to rename a stadium, since the brand spanking new Atlanta Braves stadium is SunTrust Field. So who knows, right? Yeah. I don't know if they'll move the formula or not. I doubt it's hard to move a recipe, but probably fine where it is.
Let's move on to Twitter. Fourth quarter revenue and adjusted profits came in higher than expected, and nobody cares. Shares down 10% on, among other things, pretty light guidance for the new fiscal year.
Yeah.
We like it when CEOs are very transparent in their communication style, and in this case, Jack Dorsey being upfront about the fact that their operating expenses are going up in 2019.
Yeah, they've added some employees, although it is still a pretty light. They have less than 4,000 employees at Twitter, which surprised me. Twitter also has had had an issue over the last several quarters where the number of monthly active users has dropped. And one of the strategies that they have for solving this is that they're no longer going to report monthly active users. So that should help. I mean, yeah, and it is something that investors look very closely at in terms of the health of this company.
See, maybe this says something about me, but I always opt for maybe not outright cynicism, but
you're a cynic.
I'm always instantly curious whenever any company that has been reporting a certain metric comes out and says, we're not doing this anymore. Yeah. And I view cynicism, not the right word, skepticism. Because I think
now you can be cynical. It's okay.
But if there was an advantage in them to continue reporting it, they would. And so my default setting is, well, clearly there's no longer an advantage in it for you to keep reporting that number.
That's right. And this is actually one of the greatest hints that I can give people in terms of trying to analyze companies. If you look back over a few years and they report or focus on different key performance indicators each time, it means that they're really just trying to show you at all times what looks best for them. So, yeah, I mean, perhaps Twitter's argument in this case is that it's a slightly misleading statistic since all of their monthly users are not worth anywhere near the same value. So they feel like they've got a better measure than this, but this is something that people pay very close attention to, and the cynic or skeptic among in you would definitely go to the fact that yes, they are taking this away at a point in time in which it's been declining.
Stock's still up over the last 12 months, even with the drop today. But yeah. Jack Dorsey has been doing a bunch of interviews lately, sort of long-form sit-down interviews, both on podcasts and sitting down with magazines. He did that recently with Rolling Stone. And considering the fact that Twitter is a $23 billion company, Jack Dorsey still talks like someone who isn't sure what he wants this business to be.
Yeah, it's long been Twitter's such a mystery to me, and one of the things that has always concerned me was the quality and the depth of the management. For a time, there was a revolving door. Jack Dorsey has been focused on a lot of different things. I mean, you hear more about him like fasting or his weird diets or going to Burma or whatever it is that he's up to. One of the things I look at for companies is whether if a company disappeared tomorrow, would it be painful for its users? And in this case, you would definitely say yes. Twitter is... For
anyone who's on Twitter and uses it on a regular basis, I would absolutely say yes.
Yeah. I mean, it might make ESPN broadcasts a little easier. Like you don't, blah, blah, blah is tweeting about, LeBron James is tweeting about fencing, whatever it is. But it really is a utility in that way. But at the same time, maybe it's just me, but I don't know what this company does to expand or to make its members and its users more valuable. I don't see what Twitter can do, what lever they can pull. And it's just not for a company worth more than $20 billion, it's not very profitable.
Unlike Twitter's fourth quarter, Chipotle's fourth quarter, boom.
I feel like we need to have LL Cool J playing in the background for this particular segment.
Don't call it a comeback.
Don't call it a comeback.
Shares up 14%. It was a strong quarter. Traffic up. Same-store sales up just over 6%. In this environment, coming off of
it's unreal.
Coming off of the year that we just had for restaurants,
yeah,
6% is tremendous.
And Chipotle stock was up 14% the last I checked, and it was not as if Chipotle stock has not already had a torrid 2018. They are not bouncing off of the bottom. So I went back and looked because I just wanted to see what kind of momentum there was for Chipotle. So you've just said for the fourth quarter it was 6.1% same store sales growth. For the third quarter, it was 4.4%. For the second quarter, it was 3.3%. The first quarter was 2.2%. So they have had a lot of momentum. Brian Nickel, has caused a huge amount of optimism behind the brand, behind the company. He's gone in and he's fixed a lot of things. I think it's very safe to say that Chipotle has now gotten past the really horrible queso issue, and then it's really I can't remember what else happened with them. I don't quite.
They had a couple of health issues.
They had some health issues. That's right. Yeah, which were real, and they really did a lot of damage to the brand.
Absolutely.
And to me, that's what's most important.
Another thing you look at that's rising within Chipotle is online orders. They highlighted that in the report, and that's something that we've been watching with this company. And I think that the fact that they sort of laid out this blueprint for. We want to have dedicated space in the kitchen just for the online orders. That's a smart move. That's also, from an execution standpoint, that can be tough to pull off. Right now, they look like they're pulling it off.
Yeah,
nicely.
and you remember not that anecdote should take the place of data, but how hard it was to actually go in when we had ordered online from Chipotle several years ago when they'd first rolled out their app. The other thing that's becoming meaningful for them is what they call the Chipotle lane, which is the drive-throughs at Chipotle that are keeping people moving through different channels at the same stores, and it has definitely. I mean, the numbers are astounding for what they have done over the last year.
No, from a business standpoint, it's great. Just from a word standpoint, Chipotlane. That's in the same. That's in the same camp as Zestimate for Zillow. It's like okay, that's cute. That's cute that your drive-through window is called the Chipotlane. But
to be fair, I'm not sure if they're calling it that or if that's what's been socialized. So let's not blame them too much. I mean, the Zestimate. That's right.
We're going to put that all on them. And hey, as you indicated, in all seriousness, just imagine if they get queso right. Just imagine what, if they can get, because anytime we look at restaurants, anytime we look at retail, one of the things we like to look at is the average ticket price. Not just how many people are coming through the front door, but how much are they paying when they're getting ready to walk out. And if they can get queso right, then all of a sudden the ticket price goes up.
Right. I've been I've been on a little bit of a health kick trying to get myself back in order. So queso has not been on my list of things to go and eat very much of, but it was pretty easy to not eat Chipotle queso over, let's call it 2017 going into this last year. Yeah, if they fix that, and they've still been testing chorizo, which is delicious. So they've got a number of levers that they can pull to bring some additional excitement into the restaurant.
Because I want you to succeed in your health kick, I'm just going to tell you, stay away from District Taco because those people know how to do queso.
Those people, their queso and their guacamole are outstanding, and someday I will be able to have it again.
Bill, man, thanks for being here.
Great to be here, Chris.
As always, people on the program may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against, so don't buy or sell stocks based solely on what you hear. That's going to do it for this edition of Market Foolery. The show is mixed by Dan Boyd. I'm Chris Hill. Thanks for listening. We'll see you on Monday.